Welcome to the Mining Store podcast, Australia's #1 crypto mining rig solution provider, covering the latest news and insights into macroeconomics, cryptocurrency markets, altcoin news, and technical analysis. And now, without further ado, let's hand it over to the miningstore.com.au team.
G'day guys, welcome back to another episode of Mining Store's weekly market update podcast. Today we're covering a whole range of things, sticking to the similar structure that we've been following each week. We've also got a bit of an update on miner stock, what's going on with the difficulty charts, of course going into the global economic updates. Taylor's going to be going through his community questions that we've had come through. Great to see that they're still rolling through. And so I might actually hand over to yourself there, Taylor. Do you want to jump straight into the community questions?
Yeah, perfect. Once again, obviously, as Will said, thanks for sending them through. First one we've got here is in regards to a community member who's reached out about altcoin mining. Seeing how discounted the altcoin miners are at the moment, is it smart to be purchasing one of them before I've even bought a Bitcoin miner?
I think you might have the answer to that, Taylor.
I think at the moment, you know, we've sort of discussed this pretty prevalently over the last few weeks, just because obviously I think we're all a bit in awe in the sense of where the prices have come, depending on, you know, what mining you're looking at. For us, I think obviously Bitcoin is probably one of the strongest investments going around when it comes to mining at the moment, just with security and long-term, you know, strategies in place. When it comes to anything like mining ETH at the moment, pretty risky considering, you know, you might purchase one for a few grand and realistically it's going to switch off in a few days. So it's not necessarily a smart play lengthwise. When it comes to any of the other ones, you know, we've got Cadena miners in at the moment. You know, we've got a dual Litecoin Doge miner. Yeah, they're a very good play. I think, you know, obviously the Cadena miners have come down pretty significantly in price, but having that exposure without any sort of security in the sense of, you know, having a fallback in BTC or something like that is a little bit too risky, I think, for me personally. Well, you know, I've thought about it.
I mean, we saw a perfect example recently. We won't mention a client's name, but they kind of were looking at something around the 10 or 15 BTC miners earlier last year. Recently, we got back in touch with them and they'd gone ahead and bought a whole bunch of the altcoin miners, which at the time probably were, you know, returning quite a good investment. But right now, that coin has unfortunately suffered in price quite a lot, and it's not doing so well. It may not return. So they can go really, really well. We usually only offer miners that we feel like are going to give a good return on investment. But in terms of, as Taylor says, jumping on your first miner or your first batch of miners, usually best to build up that Bitcoin mining before anything else.
Got to respect the king.
Got to respect the king.
We've had another one that's come in. How can I advance my position with my mine BTC? It's currently just sitting in my wallet. Is this the best position to be in? Anyone's thought?
Yeah, I can answer that one. So it's a really, really good question. It really comes down to the word of DeFi. In my opinion, that's probably the best way. A lot of people that mine Bitcoin, they don't want to sell that Bitcoin for Australian dollars. They want to hold that, get that long-term value. We've talked about that a lot in previous episodes. And basically what you can do using DeFi protocols is you can usually stake that Bitcoin on platforms to earn a percentage back. It might be paid back in US Tether or US dollar equivalent, or it may be paid back out in Bitcoin value. So we do a lot of training on this in the Trading Academy. We actually have a DeFi course coming out very soon. So once we launch our Imperial Wealth branch, we're going to launch the DeFi course with that. And that's going to teach a lot of you guys how to get a staking benefit on coins that you're already holding. There's no point in leaving it there. It'd be the equivalent of leaving all your funds in your bank account in an account that's not earning interest. So it's good thing to do. There's different levels of risk. Sometimes you may be earning 2, 3, 4% on a lower risk, more native platform. Or you can get right down the rabbit hole of crypto and, you know, take on more risk and get up to 60, 70, 80% sometimes. So all the training will be there. And yeah, that's something that actually we've got coming out soon.
Yeah. There's one more, but I actually am going to leave that until we do a bit more of sort of the macroeconomics, because I think it'll fit well after that.
Yeah,
for sure. Sounds good. Fez, we'll hand over to you to do the macroeconomic update.
Give me a second, Fez. Sorry, I'll just begin to share this.
No problem. So I guess the key event over, since last week or since our last podcast would have been the Jackson Hole Symposium that was taking place kind of Thursday, Friday, Saturday. And, the markets tanked coming out of the symposium. Cryptocurrencies weren't immune to that risk off move in the markets. They obviously moved lower as well. And I guess one of the main reasons was the September kind of Fed pivot scenario that we've been kind of playing with. I guess that's kind of off the cards now. So they're going to continue raising rates aggressively. I believe the quote was, "We will keep at it until we're confident the job is done," i.e. killing inflation. So they didn't take inflation seriously in 2021. They said it was transitory, which didn't actually happen. So, I think they're going to kind of keep raising rates until inflation obviously sees a serious pullback in the market. So, I guess the saying, "Don't fight the Fed," is true. We do know they're going to keep raising rates. So there could be a bit more pain coming in the short term. They will need to pivot at some point or take a less aggressive stance at some point. So it's just a question as of when that's going to be. Now, something that I've been looking at is the housing index. So we take a look at this chart, which is the NAHB housing index, which has a strong correlation to the US unemployment market. Now, one of the main reasons why Fed officials and US government officials have been refusing to use the word recession is because the unemployment rate is still near record lows. So the labor market is pretty strong. However, if we use the housing index, which has jumped by around 30 points as a leading indicator, that generally is followed by a large increase in unemployment. So this is kind of forecasting the US unemployment rate to increase to around 6% in 2023. So still there's a lot of fundamental data in the background suggesting the US economy is going to get a lot worse over the coming months. So yeah, bit of a tough one. Keep in mind September is generally the worst performing month of the year for risk assets. So that may also filter down into cryptocurrencies as well. So yeah, the September Fed pivot theory out the window. So we're expecting a bit more of a weaker or softer markets over the next couple of weeks.
Yeah. Yep, that's
Sure.
good. Alrighty, we'll just continue. There's just one last fundamental point that I just wanted to raise before we move on to anything technical. To those members that saw yesterday's BTC update, we mentioned the Mt. Gox creditors. I think everyone in the crypto space kind of knows this tale. The Mt. Gox obviously was hacked a number of years ago. A lot of
the Terra Luna of
through. Yeah, and essentially what happened was all these people lost their Bitcoin, and then it's come to a stage now where as creditors, that it's getting returned. And everyone kind of fluffed up this theory that they were all getting it back at once in August, and because they held it when it was $500, they'd all just dump it at 20K because that's off the top of them, I can't figure it out off the top of my head, but it's a huge return anyways, even if they're selling at the bottom of the market. But I think that's been put to rest now. So this Eric Wall, who's a Mt. Gox creditor, confirmed that there wouldn't be a dump. And he kind of countered the rumors floating around on this. A lot of creditors haven't received it yet, or they're not even in the process of kind of receiving it yet. So I think everyone was kind of fearing that would be the black swan event to maybe put Bitcoin where it is now down to that super low, or to retest that low. And I think the reality of the situation is anyways that 137,000 BTC, whilst that's about $2 billion in value, there's about $30 billion in trading volume per day on Bitcoin. So it's still not even 10% of trading volume. So we can put that one to rest, I think, for now at least. But we can keep updating you guys on that situation as it comes. These are just other general fundamental points. If anyone wants to read those through, they're just nice, handy statistics. And then, we'll move on to some technical analysis. So just off the back of what Tony was talking about, we saw a huge, particularly in the back half of last week, and then going into this week, the DXY continue to kind of push upwards. Everyone knows about the inverse relationship this has with cryptocurrency. We've showed those charts many times. It's kind of continued up that ascending channel we showed. and coming to that really important resistance point of 110. And I'll actually show where this resistance point comes from. It comes from 2002. If you track this down here, it's in November of 2002. So we've actually, the US dollar index is actually the highest it's been in 20 odd years, which is crazy. And there's a number of reasons for that. I think we can get into it a bit later when Taylor brings up his question, but with European energy prices, we know those are going through the roofs. There's issues with the Chinese economy, and I guess the combination of a lot of these factors are making the demand for the US dollar just rise and rise and rise. So it is a bit worrying because obviously it's really bad for cryptocurrency, and we don't know how high it can go. The next resistance I think is at 120. But in saying that, if we were to kind of hopefully stall here, there's a double top that could potentially form. It's a very bullish for us, obviously bearish for the dollar index, but that could be something that could play out and give us a chance of seeing maybe a potential reversal in price. And yeah, obviously help Bitcoin bottom out and go from there. Just moving on to Bitcoin, we'll just go through, you guys have seen this many times, but the last time you saw it was about here. We're now here, so the bear flag has kind of officially broken, and we're seeing that downside move. And then we showed you a kind of smaller bear flag developing on the price action. I think I sent this out last week when we were about here, and I kind of drew an arrow up to hit the top of the range and down, and down we came. So yeah, if you couple that with the bearish pennant that was also shown, like I think there was just a number of signals that probably pointed that, when we were consolidating in this range, it was very crucial for everyone to understand that we were probably going to see even lower. We made that pretty clear in all of our analysis and in the podcast last week, and it did play out. But for now,
head there, Mitch.
Sorry,
you hit the nail on the head there, mate.
Thank you. Well, yeah, it kind of finds us now in this situation where, correct me if I'm wrong, but I think we reached that looks like 19,500, and since we've kind of bounced a bit and had some good support, particularly today, Taylor's been dancing in the other room at BTC, getting above 20k again. So once Taylor's getting dancing, that there's some good price action. But yeah, so what can we see from here? We've bounced from this. It's not shown here, I've got it on a different chart, but there's actually the 2017 ATH was 20k or thereabouts or so that's where it's kind of finding its support from, and bouncing from there. So a potential bullish pattern that could happen from here is actually a bullish harmonic shark pattern. It's a kind of an in-depth kind of pattern to use, but most of the people watching wouldn't have seen it before. But essentially it's just another harmonic chap pattern where you're looking for a trend reversal. In this case, it's following 4 price swings, and the assumption is here that the price is coming down but will reverse at some point. So yeah, this is a bullish outlook. And I just wanted to point out, even if we see a bullish reversal, we break above that 2,800 again, there's still a chance we retest that low and then kind of go up from there. But yeah, this is just another pattern that can be identified for potential price reversal. And then, yeah, yesterday to our members, I kind of just showed how we're kind of just ranging, drew this down here, kind of pointed that we'd hit the top of the range and come back down. We wicked the top of the range, bounced off the golden pocket, wicked up again, and have since come back down. So could be a couple of days of frustration here for those shorter term traders. Just be wary. We couldn't just kind of consolidate and range here like we have at other prices, but yeah, just important to keep that in mind. And then yeah, lastly, we'll just move on to Ethereum. We had those rising wedges played out. I just kind of wanted to point out, it kind of like the BTC where we had the major bear flag play out with that smaller time frame bear flag play out. Pretty much the same thing happened with Ethereum with these rising wedges, and we saw them play down to the downside. To those members that have seen this, there is a technical pattern of a head and shoulders forming on Ethereum. It's a bit rough. These aren't always perfect in capturing the actual price action, but you can see this forming. And I made the comment last week, if we see the neckline break, we could see further downside. We did see that neckline break, the neckline being here, and then perfectly wicked and tested, obviously, this support from mid-July. and have since now retested the neckline. So I think the next 24 to kind of 48 hours is really important for this particular pattern to see if it does play out further to the downside. And I guess if this wasn't to play out to the downside as such, because it is, quite a bearish pattern, it would probably come in this form of the falling wedge, which funnily enough is complete contrary to what's been happening in the past with a rising wedge. So now we've gone all the way up, we've come all the way down, and you can see this kind of falling wedge playing out. So it's quite literally the opposite to what I've shown you guys over the last few weeks with a rising wedge, but we've got a falling wedge. So potentially to invalidate this, we would need to hold this support line, retest the neckline, and then obviously break the apex of the falling wedge and head upwards, which would invalidate this as well. So some really interesting price action occurring on kind of BTC, the DXY, and ETH. So just something to keep in mind. We'll keep updating you guys on those charts. And now I believe, Tony, you wanted to touch on the fear and greed index as an indicator as well.
Yeah, so I mean, besides technical analysis, which gives you a good understanding as to what the market is thinking and doing, you can also take a look at the fear and greed index over time. So the fear and greed index really tells us how retail investors are feeling about the market. Extreme fear in the market is generally a contrarian signal to possibly enter the market and to start accumulating Bitcoin. Generally, the retail trader is wrong about the market. And on the opposite side, generally extreme confidence or greed is generally a signal to exit the market. Now, I've highlighted on the fear and greed index, the market bottoms and tops and the extremes. So every time the fear and greed index reaches that kind of 10 level, which is extreme fear, that's generally a significant bottom in the market. So you can see we've had that 3,000 back in 2018, 9 to 10,000 in 2019. We had another dip lower to 4,000 in 2020 before the major bull market cycle to the upside. We then had that mid-cycle adjustment at 34, 35,000 before the next leg to the upside. So we now know the fear and greed index has reached that kind of 10 to 11 area over the past couple of months. So that generally and historically has been a good time to start thinking about buying BTC. Okay, so if we just go down to the second chart, Mitch, this is the fear and greed index plotted against the price of Bitcoin. The deep red indicates extreme fear in the market. And as a contrarian investor, this should make you aware that the retail market or the retail investor is quite nervous about the market. And it's actually when you as an investor should be looking to accumulate. I'm not saying go all in with your money and start chucking crazy amounts of cash at BTC, but start allocating funds at certain levels on the price of BTC, because in the long run, that's generally the good opportunity to get into the market.
I think the same could be said for mining market,
Definitely.
Yeah. And I mean, it comes down to what Theo's just said there. This is an indicator of retail in terms of their fear and their greed. And then we've shown you guys many times the hash ribbons indicator, which I also showed last week, which is pretty much almost the same thing as fear and greed, but essentially, but for mining, we saw miners capitulate at a certain point, and historically that signal, just like fear and greed reaching, let's say less than 10 or 10, has always historically been correct in indicating when you should start accumulating near the bottom, when the blue buy signal flashes, and from there on you're pretty safe. I mean, sometimes it just comes down to that simplistic nature of it, doesn't it? You can do as much on chain or as much charting as you can, but I'm sure if you followed what Tony said about the fear and greed index over the last 10 years, you'd probably be up a lot of money just hodling and following that. So
they just, it's like that saying, like the not the past is the same, but it can rhyme.
Mm-hmm. It's particularly the case with Bitcoin, isn't it?
Exactly.
But yes, I think that's everything from the technical side. We'll just, Taylor, did you want to ask that? I'll just scroll up so we can revisit some of that economic information. But did you want to?
It's a pretty generalized question, but I think it's something that is going to provoke a bit of conversation. So where do we see the economy going over the next 12 months, and what impact is that going to have specifically on it, whether it's, mining clients or people involved in the crypto space?
Yeah.
It's very open-ended.
Well, yeah. I mean, my personal opinion is It's a hard question to answer, and it's the exact same as charting. You know, your ideas and your bias can change in a heartbeat. For instance, we've had many discussions on here. Me and Tony have spoken about it, the pivoting in September, and that was the thought process of a lot of analysts and a lot of traders. And you know, last Friday it flips it on a head in a heartbeat. And you know, people go from saying, well, actually the pivot will come in September, October, November, to now saying, well, hang on, it could come in March now. And, you know, that completely changes the landscape of everything. So I think it's hard to give a definitive answer to this question. And we can only do it based on what we know now. But given, you know, what Tony's kind of said, and generally speaking now, what a lot of people are saying is that if there's more pain to come, I believe this can well go into 2023 now. Whereas my original viewpoint was it would kind of, we could see the kind of a mid-year rally to a bit of a pullback, then easing at the end of the year. And I think, you know, what Tony pointed out before, it's only going to get worse if unemployment gets worse, because then we have to start officially labeling things a recession and whatnot. And that's when people start to panic. But particularly, you know, if the DXY continues to perform strongly for the rest of the year, in cryptocurrency's case, I don't see us getting too much higher from where we are.
Yeah, I'll just add on that as well, Mitch. I just want to, I agree with everything Mitch just said there as well. I just want to kind of make it clear that although the stock market may rally, the stock market isn't the economy. The stock market is forward looking. So the stock market may be looking 3, 4, 5, 6 months ahead into the future. So if we do get a rally in the stock market, it could be potentially because it's pricing in a Fed pivot later next year in 2023 and lower interest rates as well. So yes, the economy could get a lot worse, but there is a difference between the price action of the stock market and cryptocurrencies and what's happening right now in the underlying economy as well. So that's quite hard to kind of get your head around a bit, I guess.
And I just do want to add is onto things changing quickly is, for all we know, it could go back to how it once was and we decouple from the stock market. You know, once upon a time before this year, and particularly the end of last year, we didn't move with the stock market. Bitcoin, we didn't move in unison with the other financial markets. And, you know, so that's another thing to keep in mind is that, yeah, we're basing this information on it now, being that the correlation coefficient, say, between the NASDAQ and Bitcoin is the highest it's ever been. But that's not to say that next year, you know, people might start finding safe haven if the globe keeps going the way it's going. You know, maybe Bitcoin's use case increases and it starts to decouple. Like it once was.
I think for the mining side, just quickly, despite like obviously Bitcoin dropping about in the last week 7%, it's not the same for the mining network, just in the sense of both mining difficulty and network hash rate is actually up on an 8-month high in comparison to January this year, which means that the confidence in people mining is there again, and people are buying the equipment. And we've actually seen it from our own personal experience. We've been selling obviously S19Js and Pros at a really relatively lucrative offering, and now we've actually just virtually sold out of the S19Js. So we're seeing it from us, and I'm seeing it at the wider mining side. I guess it's a little bit different for like trading and investing, obviously different standpoint, because you don't want to get in and get caught holding the bag. But I guess with hardware, the competition is coming back in the fold. So I guess it's a good opportunity to be considering if you are mining. And I've said this before, and I'll be honest that the people, even ourselves personally, you know, some of us bought mining equipment over the last 6 months, so we've felt the pinch as well. So a lot of our clients that have bought previously at higher prices obviously are also buying machines now to offset some of those higher prices that we've been caught out on. So I think just taking the opportunity to like look at it through a clear lens and understand that, like we said last week, that these mining equipment, if you think about it, it's like 4 or 5K US dollars. If you hear that number across the board in the industry, it's a very, very low number for an S19J or Pro. So yeah, just in summary, I think, and it's the manufacturer cost to develop these machines it's almost there. These prices are cheaper than what they were prior to this bull run, which says a lot, you know. So
yeah, 100%. I mean, as you said, Theo, we're already out of the S19J Pro model. You know, that's already sold out. We're starting to Cal and I are starting to find it harder to source miners at these prices. You know, that we've had plenty of offers much higher, but there's really not that much at the prices that they're at right now, which tells us that it's probably going to get dried up pretty quickly. Already they've told us that's 19J's out. I think we've personally got around 10 left of the hydros. I know they're not coming out. The next model of the 198 probably won't be till around next year. So like right now is really the time, and in the past weeks, to expand on those operations. Most of what we've sold has been to clients, as you said, there that are, you know, dollar cost averaging down their hardware costs. More sophisticated investors purchasing another 5-10 miners to make sure that their hardware costs have come down a bit. There's probably less of those newer miners, but you know, those newer miners tend to, you know, when Bitcoin pumps to 30, 40, 50, 60K, then their eyeballs light up and they want to get in now. So, I mean, now's a much better time. That's a bit of update on the stock side of things. So just to reiterate, we do have the S19 Pro 110 terahashes at 6,300 still available. We also just want to update that the hosting situations that we've got, we've expanded into US, if people weren't aware. We've got 13 cents available in Texas at the moment. We haven't had curtailment issues like some other people in Texas have had. We're much closer to a main city, which is obviously of major importance to Bitcoin miners. You want to make sure your miners are online as much as possible. And we do also have cheaper electricity in Paraguay. We can host there at 11.5 cents. So some people may prefer to host in Texas, some people Paraguay, some people prefer to stick in the EU. But we have a lot more option open now, which is really, really good.
Yeah, that's definitely good, because there's some people, even some existing miners, are shopping around to just actually like diversify their exposure in terms of actual countries.
100%. I mean, I don't know about you guys and your clients, but I had a few myself, you know, just in the past 3 or 4 weeks, pick up some miners simply just to diversify their geographical exposure there. So that's what we get on the mining update. Is there anything anyone wants to add in general? Or is that pretty much a wrap there?
I had a good one that I saw the other day that I thought was interesting. What is the second highest rising commodity in Germany at the moment? Anyone?
Avocados or something silly like that.
No. Anyone?
Glass.
Sorry?
No,
Glass. Nah. Close, but no. That's
no, you told me this.
firewood.
Firewood.
Yeah.
Oh yeah.
Of energy prices.
Energy crisis. So literally they're at a point now where the EU is concerned they're not going to have enough natural gas for winter. So Germany, particularly because of the Nord Stream, are purchasing firewood like no tomorrow.
Well, isn't there cases of some energy bills have gone from $50 to 2,500 or something?
Yeah,
just on that
insane.
thing. So there's quite a bit of talk about the EU nations putting pressure on Ukraine to come to some sort of deal with Russia by winter because of that situation. So also, you know, don't forget that if there is kind of like a ceasefire or some sort of agreement there, that may give the market something to cheer about as well. So that is still ongoing in the background, and you know, it's kind of a story that's now in the back of everyone's minds. But do watch out for any kind of positive news around that Russia-Ukraine conflict as well.
And we'll obviously keep everyone up to date if something does happen too.
Yeah. I found it funny that the firewood all comes from Germany. Sorry, from Russia. Okay, righto.
Easy peasy. Alrighty. Thank you.
Awesome. Well, thanks for tuning in, everyone. And make sure that you tick the notification button so that you get the first release next week as well. All right. Take care.
Cheers, guys.
Cheers.